Welcome to Talk Tickers. Today, we are tearing into Bank7 Corp's third quarter 2025 results. So here's the puzzle. The numbers looked fantastic. A really solid beat on earnings, a solid beat on revenue. And yet, the stock barely moved. So the big question we're tackling today is this. What's the market seeing that we're not? Let's dig in. All right, first up, the headline number. GAAP earnings per share landed at $1.13. Now, that's a clean beat. We're talking anywhere from 7 to 10 cents above what Wall Street was expecting. A really solid win on the bottom line, no matter how you slice it. And hey, it wasn't just about earnings. It was the same story for revenue, which came in about 5% ahead of what everyone was looking for. So you see the pattern here, right? A clear-cut case of outperformance against the consensus. Now, this next number, this is where things get really interesting for a bank. The net interest margin, or NIM, came in at a super strong 5.07%. I mean, in this interest rate environment, a number that high is impressive on its own. But the fact that it actually ticked up from last quarter, wow, that points to some serious resilience in their balance sheet. Okay, let's pull back and look at the whole dashboard here. Net interest income hitting $23 million, total assets growing nicely to almost $1.9 billion, and look at that Tier 1 leverage ratio of 12.71%. That is a fortress. Across the board, these are the vital signs of a fundamentally healthy, incredibly well-capitalized bank. So, the numbers are great. But how are they pulling it off, quarter after quarter? Well, if you ask management, they have a pretty simple and confident answer. They basically frame their own consistency as being, well, a broken record. You gotta love hearing this directly from the CEO, right? When you call your own company a broken record, you're not just being humble, you're signaling this incredible confidence in your business model. This isn't about flashy one-off gains. It's about a machine that just keeps grinding out that predictable, organic growth. And what's powering this machine? Well, it really boils down to a few key things. First, just like the CEO said, it's that strong organic loan and deposit growth. They're just flat out winning new business. Second, that amazing NIM we saw, that's coming from what they call a properly matched balance sheet. Then you've got this interesting dynamic where, yeah, they're feeling the squeeze on what they pay for deposits, but it's been less than the pressure on what they're charging for loans. And finally, they're playing it smart. They're beefing up their loan loss reserves, not because their loans are going bad, but just to be safe with all the macro craziness out there. So all this consistent performance, it generates a ton of cash. And that begs the big question for investors. What are you doing with all that money? Well, Bank7's management team has a really clear three-part answer for how they're giving that value back to shareholders. And they are not messing around. They're pulling all the classic levers. First up, they boosted the quarterly dividend by a very healthy 12.5%. Number two, they fired up the share buyback program again. And third, they are actively on the hunt for acquisitions. But, and they made this super clear on the call, they are going to be extremely disciplined about it. And that discipline is key, because the M&A world for banks is really tricky right now. Management pointed to two big hurdles. The first is what's called the AOCI overhang, basically unrealized losses on bond portfolios from all the rate hikes. It's got potential sellers just sitting on the sidelines, waiting. The second is just a classic disagreement on price. The bottom line from the call was loud and clear. They are not going to overpay for a deal, period. And this right here brings us all the way back to that first big question we asked at the top. If performance is this solid and management is executing this well, why the lukewarm reaction from the stock? Well, to answer that, we gotta zoom out, because in investing, context is everything. And boom, this slide tells you everything you need to know. Over the past year, Bank7 is up a respectable 9.5%, but it's lagged the broader regional bank ETF, KRE, which is up almost 15%. See, the market isn't surprised by Bank7 being good. It expects them to be good. The story here is that steady just hasn't been enough to lead the pack in a sector that's been on a much bigger rebound. So where does that leave the stock? We've crunched the numbers, we've listened to management, we've put it all in context. Now it's time for our take. The next call. All right, our rating is market perform. Look, the execution here is fantastic. You cannot argue with that. This is a top-tier team. But, and this is a big but, it feels like all that quality, all that good news is already baked into the price. Without some kind of big catalyst, like that perfect M&A deal they're looking for, the stock is probably going to keep performing in line with its peers, but not necessarily ahead of them. But that leads us to our favorite part, the outrageous but plausible trade idea. The whole thesis is this: Bank7's mountain of capital and its patient strategy make it the perfect buyer when the M&A market finally thaws. So, the trade? It's a pairs trade. You go long Bank7 and you short the regional bank ETF, KRE. You're basically betting that this specific management team will eventually outsmart the rest of the sector by making a killer acquisition, which will cause the stock to finally break out and outperform. The catalyst you're waiting for? That big deal announcement. And of course, as always, we have to end with the most important thing. This is not financial advice.